If I asked you today, is your car an asset or a liability? Some of you will say confidently, my car is an asset. Others will have a contrary opinion that their car is a liability. So in today's video, I want us to clear this up. And by the end of it, we'll have known whether a car is an asset or a liability. Welcome to Financial Creatives. My name is Alex Mwangi. And if you're new to this channel and you want to learn how you can master your money and create more income, consider subscribing and remember to hit that notification bell so you don't miss anything. Now, this has been a debate for a long time, and actually financial advisors have different opinions on this issue. Now, you have heard people saying that a car is not an asset because it depreciates in value. A car is not an asset because it doesn't generate income. Or some will say that a car is definitely not an asset because you incur expenses to maintain it, money that you would have invested somewhere else, and it will be giving you back more returns. But is this all true? We'll see. Now, there are three different things that people miss out. This is the difference between an asset, a liability, and an investment. Let's look into it. Now, an asset is an item that has value. If you own an item that has value, that is considered an asset. What about a liability? A liability is an obligation or an item that you owe to someone else. Now, if you have an item or an asset that does not belong to you and it belongs to another third party, that is a liability in this case. What about an investment? Now, an investment is an asset that you purchase and you expect it to bring some future income, or when you sell that asset in future, you'll get some income or profit. Now that we have those three concerns at a bay, let's go to a different issue. Now I'm going to give you 4 categories or classifications of assets. Now, the first type of an asset that we have is an appreciating asset. What asset is this? This is an asset that gains value with time. The second in this category is a depreciating asset. It's an asset that loses value with time. In the fourth category is an asset that generates income. As you know, this is an asset that if you own it, it will give you some future incomes. The fourth one is an asset that incur expenses. This is an asset that for you to own it, you have to incur some expenses for its sustainability. Now we have that chapter closed. Now, out of these 4 classificational types, we have some semi-classification that merges 2 or 3 among the 4. Now, our first category here is appreciating assets that generate income. What type of asset are these? This is an asset like a real estate property or a rental property. Rental properties appreciate in value with time, but at the same time they generate income for the owner. The second one is appreciating assets that incur expenses. What type of an asset are these? These are assets that if you have them, they'll appreciate in value with time. At the same time, you have to incur some expenses to sustain these assets. An example of such an asset is your personal house. I know this can be a little bit confusing. Now, if you own a house, you don't rent it out. And that means you don't earn any income out of that house, but you incur expenses like you have to pay for land rates, you have to pay for maintenance, for electricity, and other miscellaneous expenses for your house to be conducive to live in. So it's an appreciating asset that incur expenses. Now, other category is a depreciating asset that generates income. Now, what type of an asset is this? This is an asset that when you have it, the value does not increase with time, but it helps you generate income. What type of an asset are these? Now, if you have a laptop that you use to work online or to do different work that brings income to you, that is a depreciating asset that brings income. There is industrial equipments. Industrial equipments that are used in manufacturing things, they don't appreciate in value, rather they depreciate in value. But they are part and parcel in helping that industry make more income. Another one is if you have a car that you are using as a taxi or a car that you are using for business, that is an asset that is helping you generate income. Are we together so far? That's it. So let's go to the fourth category. These are depreciating assets that incur expenses. These get confused with liabilities, and this is where people go wrong. They are assets, you cannot deny them that, but they depreciate in value and you incur expenses out of them. For example, such an asset is your personal car. If you bought a car or you intend to buy a car that you'll solely use for your leisure and convenience, a car that does not bring income to you at all means the only thing that you incur is maintenance cost, you have fuel cost, insurance cost. Those are expenses. This is where most of us fall within. Now, most of us own cars that are not generating income, which is detrimental to our financial health if we are not suited or if we don't have enough revenue to sustain our cars and remain afloat. Now we have closed that chapter. You already know my thoughts and conclusion. Now, you may ask me, now Alex, I have a personal car and I have a loan for that car. I'm paying both. How is that an asset to me? Now, the first ground rule is a car is an asset, but a depreciating asset that incur expenses. But your loan is a liability. So you have an asset on this side and you have a loan on the other side. Now, if you want to know whether you are on the positive or negative, take the current value of your car minus the outstanding obligation or loan and you'll get the net effect. Now, if your loan is higher than the disposable value of your car, you have a net worth given that asset. Are we together? Yes. So is a car an asset or a liability? We have it, guys. A car is definitely an asset. Now that we have concluded on this issue, you might be asking, Alex, should I buy a car or I should never buy one? Now, my answer to this question will be a yes and a no. Why do I say a no? Let's start with a no. Now, you should not buy a vehicle or a car if your financial position is wanting. What do I mean by wanting? If you have not laid your foundation and you have your emergency fund in place, money that can take you 3 to 6 months of expenses to cater for your family and other obligations, you should not buy a car yet, because things happen in life and life is unpredictable. And when this happens and you have that car that is generating no income and is depreciating in value, it will make you sell other valuable things, or you'll end up selling that car at a throwaway price to sustain yourself. On the other hand, if your financial foundation is already set and you believe that based on your financial statement or your net worth, you can be able to cater for yourself, you have an emergency fund and other income generating investments, you can buy a car at your own pleasure, because you can meet your obligation easily without being under financial distress. Now, another consideration that you need to consider is the reason, the why are you buying this car. Now remember, there is a depreciating asset that generates income, and this includes a car for business or a taxi. Now, if you intend to buy a car that you'll be using as a taxi or you'll be using to run your business, this is a good asset. Why? This car is going to sustain itself. It's going to give you or help you make more money so that you can pay off the loan, and also you can cater for its annual or weekly maintenance, things like fuel, insurance at ease. This is the kind of asset that you should be going for. Now, that's the end of our debate. Leave me a comment below and tell me what you think. Are you of this idea that a car is an asset and not a liability? If you derived any value from this video, remember to share it with one or two of your friends, and don't forget to subscribe and give me that like as you hit the notification bell so that you can receive notification every time I publish a great video just like this. So until next time, take care.